Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Republic. We bring you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, imagine for a moment the quiet machinery of global finance, the vast networks of settlements, liquidity flows, and asset transfers that underpin everything from daily payments to international trade. For centuries, this system has evolved incrementally, from physical ledgers to electronic wires, each step driven by the need for efficiency and trust. Yet today, we're observing a subtle but profound shift, the tokenization of bank deposits, where traditional money is being represented on blockchain infrastructures in ways that could reshape how value moves across borders and institutions, ladies and gentlemen. This isn't a sudden revolution. It's structural integration that's often misunderstood, overshadowed by more visible market fluctuations. What makes it significant is how it addresses long-standing frictions in the financial system, potentially enabling programmable, regulated forms of money without upending the foundations of banking. From a historical perspective, developments like these remind us that true changes in finance rarely announces itself with fanfare. It's built layer by layer, incentive by incentive. And this exploration will unpack this evolution, drawing on observable patterns in traditional and digital systems to understand why such shifts matter for broader infrastructure of money. In today's session, ladies and gentlemen, we'll examine the ongoing development from stablecoins to tokenized bank deposits, a progression where commercial bank money is being adapted into blockchain-based formats within regulated environments. This shift matters structurally because it aims to embed programmable into the core of banking, potentially enhancing assets like settlement efficiency and risk management without replacing existing systems. By the end of this narration, you'll have a clear understanding of how these elements interact, from historical patterns in finance to incentives driving institutional involvement. We'll focus on verifiable facts and context, separating known developments from potential interpretations, so you can form your own views on this evolving landscape, ladies and gentlemen. Let's start by breaking this down into logical segments, beginning with the foundational concepts and building towards specific infrastructure examples. 1. Consider the role of stablecoins in this evolution. Stablecoins have demonstrated the feasibility of programmable value transfers at scale, acting as a bridge between traditional currencies and digital ecosystems. However, from a structural perspective, they've encountered operational challenges for broader adoption, such as the need for businesses to overhaul treasury, accounting, and compliance frameworks. This has largely confined their use to specialized areas like cryptocurrency trading rather than everyday commerce and use. Yet, in contrast, ladies and gentlemen, tokenized bank deposits represent a banking-led approach where existing deposits are converted into programmable forms on blockchain networks. Let this sink in, ladies and gentlemen. Okay, this is the future. This integration could allow for faster settlements, improved liquidity oversight, and stronger risk controls, all while operating within regulated banking systems. A key example here is the collaboration between Lloyds Banking Group and Archak, which marked the UK's first public blockchain transaction using tokenized deposits in 2025. They settled a tokenized UK government bond on the Canton network, illustrating how sterling-denominated deposits can be handed on a privacy-focused blockchain infrastructure. Developments like this highlight the potential for blending traditional banking with distributed ledgers, though they remain in early stages. To provide clarity, ladies and gentlemen, let's draw on a real-world analogy. Think of stablecoins as the early fax machines in business communication. Innovative for quick document transfers, but limited by compatibility issues with existing phone lines and workflows. Tokenized deposits, on the other hand, are akin to the advent of email integrated into corporate networks. They build on established systems, adding programmability without requiring a complete overhaul, potentially streamlining processes like cross-border payments, much like how email standardized global correspondence. From my time observing traditional financial markets, one pattern that stands out is how innovations often start with pilot projects that seem niche but gradually reveal systematic value. For instance, I recall watching the slow rollout of electronic trading platforms in the equity space long before they became standard. What mattered wasn't the immediate speed, ladies and gentlemen, but how they reduced settlement risks over time, teaching the importance of patience in understanding infrastructure shifts. This observation reinforces that in finance, discipline comes from focusing on structure rather than short-term noise. Moving forward, institutional momentum is evident in reports from late 2025, where sovereign wealth funds, particularly from regions like Abu Dhabi, increased exposure to digital asset vehicles, signaling growing confidence in regulated frameworks. Similarly, Wyoming's issuance of a state-backed stablecoin in 2025 underscores efforts towards interoperability across networks through full integration remains an ongoing process. Central elements in this discussion is the XRP ledger, or XRPL, which serves as an example of mature blockchain infrastructure supporting these developments. XRPL functions as a decentralized public ledger with over 116 independent validators and 910 public nodes operating autonomously from its originating company. Ripple, it uses a proof of association consensus model, avoiding energy-intensive mining or staking, and achieves transaction finality in 3 to 5 seconds, without block rewards. Let this sink in, no block rewards here. Key attributes include capped supply of 100 billion XRP units, unalterable by any single entity, and clear regulatory standing in the United States. Since inception, XRPL has been processed over 4 billion transactions, supported more than 6.4 million wallets, and settled value exceeding $1 trillion. It's a lot. It ranks among the top blockchains for real-world asset activity, with issuers like Artax, Guggenheim, and Dubai Land Department, utilizing the platform for tokenization. XRPL also hosts a growing stablecoin ecosystem, including Ripple USD, RLUSD, USDC, and regional tokens where XRP acts as a liquidity pair for efficient exchanges. Recent updates from 2025 show tokenized real-world assets on XRPL growing significantly, reaching hundreds of millions in value, while institutions and institutional treasuries like Evernorth XRP have secured over $1 billion in commitments, transitioning XRP from speculative uses to regulated balance sheets applications. Spot ETFs from providers such as Bitwise, Franklin Templeton, and Grayscale have also emerged alongside wrapped versions extending utility across ecosystems. You getting all this? It's a lot. Huge seltzer. Openings coming in Asia, going to be on the phone nonstop. For issuance and understanding, consider this analogy. XRPL's role in settlements is similar to the SWIFT network in traditional banking. Not a currency itself, but a reliable conduit for value movement, much like how SWIFT standardized international wire transfers in the 1970s, reducing frictions without altering monetary policies. Tokenized assets on XRPL can be compared to demonetization of stock certificates in the 1990s, where physical shares were replaced by electronic records, improving efficiency and custody without changing ownership fundamentals. This historical parallels provide clarity on way such infrastructures may foster gradual adoption. One thing experience in traditional finance taught me is the value of interoperability in fragmented systems. This is super important. I first saw this pattern repeat in the derivatives market, where clearinghouses evolved to connect disparate exchanges, emphasizing that long-term success depends on solving real pain points like liquidity silos rather than chasing trends. Shifting to broader industry perspective, events like SWIFT's CYOS 2025 highlighted a move from debating if stablecoins and tokenized assets integrate with fiat to how they coexist. Regulators are framing guidelines to blend these without disruption, as seen in demonstrations of blockchain-anchored ledgers bridging traditional and digital realms. However, as a former SWIFT executive noted, incumbents aren't assured leadership given pioneers have advanced settlement integrations. For further clarity and analogy, this coexistence is like the integration of ATMs into banking in the 1960s. Initially viewed as a novelty, they complemented branches by extending accesses, ultimately enhancing the overall system without replacement. The UK's Financial Conduct Authority research from 2025 reinforces it doesn't inherently build financial literacy, underscoring the need for education in navigating these tools responsibly. In terms of growth, tokenized real-world assets have expanded from around 80 million from 4 years ago to 40 to 50 billion by late 2025, with industry estimates suggesting potential scaling to trillions by 2030, driven by infrastructure like XRPL and others. The progression mirrors the quiet buildup of internet banking in the early 2000s, where initial low volumes build transformative potential. Finally, a fifth analogy for assurance: the evolution to tokenized deposits is comparable to the shift from cash to credit cards in retail, adding layers of convenience and tracking while preserving the underlying trust in banking institutions, helping viewers appreciate the incremental nature of these changes. From a long-term structural perspective, institutions typically respond to infrastructure shifts with a measured caution, prioritizing compliance and risk assessment over rapid deployment. These changes often unfold quietly at first because they involve aligning incentives across regulators, banks, and technology providers, much like how Basel Accords reshaped capital requirements over decades. Understanding these incentives, such as the drive of efficiency in settlements, matters more than reaching surface-level deployments and developments, as it could potentially lead to more resilient systems. However, the interpretations of outcomes remain evolving, and viewers should consider historical patterns where adoption accelerates once regulatory clarity shifts. To recap the key insights we've explored, we've traced the shift from stablecoins to tokenized bank deposits, highlighting structural advantages in programmability and integration, examined infrastructure like the XRP ledger as an example of supporting real-world assets, discussed institutional responses through analogies and historical context. This leaves us with a grounded view of how digital money evolves, not through disruption alone, but through alignment with existing systems. Connecting back to those traditional finance observations shared earlier, what stands out is that the patience and system-level thinking have always been the true differentiators in navigating financial shifts. As one philosophical close in the grand text of money's history, from barter to blockchain, true progress rewards those who seek understanding over urgency, fostering a sense of calm amid complexity. Have a great evening. Always stay emotionless and watch XRP closely. This could be a defining moment. This content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Well, ladies and gentlemen, this is Sunday night. Members, you're getting this first. Patreon members, you're getting this as well first. It's going to be an interesting week this week. Again, this is our opinion. Trading will be, probably in our opinion, suppressed. Price action will be suppressed more to the downside until it hits certain levels where then it will play range bound. No one's going to take fresh longs as far as we're concerned because there's just too much geopolitical and too much systematic risk going on right now. World events, Iran, issues there, Venezuela cutting off diplomatic relations with other places, Bloomberg commodity rebalancing. I want to touch on gold and silver because those should be sold. Also, aluminum is going to be sold. They're going to look to buy crude oil, nat gas, cocoa. It's going to be a good week. The Asian Open is always very interesting as far as we're concerned. It sets the tone. Remember, the biggest amount of XRP is traded in the Korean markets. Have a good thing to see what's there. Ladies and gentlemen, I want you to understand this. Why we say that, and I say this, that I will not sell my XRP, because the world's going to change. And the POTUS, his background, and we put this briefing in the Patreon, in the premium section, about, what type of businessman and how he has grown up being a businessman and what influenced him, okay? So, when you take back and read all that we put up there, he's willing to do what he feels is right. That's a big thing. That's some really big Gucci clarity right there, whether you like this man or not. The biggest thing is this, and this is what we're paying attention. Talking about cap and credit card interest. They're talking about GSEs, mortgage-backed securities. You're going to see a lot of things happen fast, happen hard. Stay frosty this week, okay? Don't take unnecessary risks if you don't have to. And always remember, The game is changing, and those who understand it first will benefit the most. Make sure on the right side of it, you have two choices. You can be like the crowd reacting after the move, rationalizing why they missed it, telling themselves to never happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink because the world is distracting you with noise. While XRP continues developing behind the scenes, building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. Just open your eyes, smash that like button, ring the bell, leave a comment with your thoughts. Turn on notification. Most importantly, subscribe to Crypto Republic. We break down the major global banking trends, shaping digital assets today, giving you contents, clarity, and research you use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.